Check the temperature of the ETFs, sector ETFs, to see which sectors you do want to look into buying more in once we hit some key levels. I want to start with retail, holding up really well. Saw a slew of upgrades this morning, the likes of Under Armour, Hot Topics. We also saw killer earnings out of Macy's, Ralph Lauren, Nordstrom's last week. What puzzles me, Scott, is that you would think that the retailers would be doing poorly because the consumer is going to be struggling. We saw weak consumer sentiment on Friday, but they're holding up. Makes no sense. And across the board. I mean, we see Macy's and then you have Nordstrom's.
Well, what's funny is last week I spoke about the retailers and I said if you're going to buy something in this group, because we talked about buying tier one in all of them, I showed the RTHs and I said Lulu and Macy's. So let's take a quick look at the RTHs.
I
did, just because you weren't here. Basically, all these charts are going to look similar where you have a lower pivot and then you have resistance. So the question is, where are they going to go? But if you look at Lulu, Lulu looks a lot different. Lulu came in, didn't even get down to the 200-day. This is when we talked about it in this 3-day pivot. It went above it, and now it's back to these highs. So if you've gotten some Lulu as an investment, perhaps you hold, but I think traders are going to try and sell in front of this 60, 62.
All right, so is that a good strategy for all retailers, or you just have to pick the best one like Lulu?
I think you pick one of the best ones and then one of the ones that you think move a little slower that have a longer term picture. That's why I went with Macy's with you, because again, if consumers are going to be strapped, Macy's have been doing well. They had a good earnings report. It wasn't met so well by the street, but I think with time, Macy's will be okay.
All right, and then switch to the semis, not holding up as well. Right on Friday, down about 1/4% when tech was up. So what do you do with the semis?
Semis also have been pressuring the market. We talked about Intel saying if you have to buy one of them, buy Intel because of the low PE, the high liquidity, a little bit of a dividend, and we buy these in the hole. We don't chase these stocks that don't move so fast. Anytime you tried to buy Intel when momentum was coming, you got hurt here and here. So down here, we talked about it versus 20. I think it's a decent tier one for perhaps a move back to about 2150 or so.
So tier one right now, you could get in.
I think you could still, and you know what, traders, if we continue to rally, if we can get above this little pivot, they might try and buy above this 21 for a move back to the 21.5 where these moving averages start to converge. So that would be your trade.
All right, let's go to the XLI here, industrial ETF, up almost 2% on Friday, but really led the markets lower last week. Industrials and financials were the two worst performing sectors last week. So what do you do here with these guys?
I would just stay away from the worst performing groups. You know, the XLI gave us clues that we were going to go lower with the home builders. If you had to be in an industrial, I would say, I guess, you could feel the most comfortable. You know, with GE, considering it just came from up in the 20s down to 16, it does have some room back to 17. But I would stay away from the groups that have been the weakest ones, the ones that gave us the clues that we're going to go lower.
Are they giving us any clues today?
We shall see. Right now, everything's opening up. We'll see if the banks go negative, the industrials go negative. That'll give us some clues that this has just been an oversold bounce, and watch out, more weakness can come into play.
All right, let's round it out here with the OIH, because, you know, Scott, it's really interesting. We saw oil very volatile and struggling last week on global demand fears, right? But then we have all this M&A that happened. Let's see, over the weekend, we saw Transocean making a bid for Aker Drilling, $1.4 billion. We also saw National Oilwell Varco signing about $1.5 billion worth of contracts with a Brazilian energy company. So a Brazilian drill ship company. So with that fundamental, it seems like they're saying supply and demand is still going to be tight. They're still making a lot of business. It seems like the OIH is a positive place to go, even if oil stays volatile.
Well, the OIHs were strong, and then they played catch up to the downside very quick. If you wanted to pick a strong group, this one is not exactly leading the market, but it is holding a bit higher. You know, as form of some of the support. Some of the other groups came all the way down to like this area. You know, this also tried to clear its lower pivot. I don't think there's anything so great here. You know, it could get back to about 140 if you're a stock picker. And you pick some of these undervalued scenarios within the holders, perhaps you can get rewarded, but as a group as a whole, I don't think you go in the OAHs. I think you pick those stocks and see which one the street likes. I know that everyone likes Halliburton, everyone likes Schlumberger,
Baker Hughes, the big guys, right. All right, so I guess the takeaway is maybe avoid the ETFs, so definitely avoid the losers like financials and industrials, but then go ahead and pick the best ones in the group and see if you can make a trade.
Yes, but that's only if you do your homework. Right now, when the Fed came out with their statement, we talked about being in like a Japan type of mode where we're going to have slow growth for about 2 years. That means you have to just trade the extremes of these ranges. But you will have stocks that outperform, the stocks that show relative strength, the stocks that are go-to, the stocks that hold higher versus the market. And that's hopefully what we're going to outline for everyone that watches this show.
Good lead-in, because we will do that right after the break with some quick trades for today.